Hello everyone and welcome back. Today we're going to talk about some payments terminology. Unfortunately, payments can be pretty confusing, and if you don't understand what you're talking about, you might make a mistake. At Judo, we do everything possible to make payments as simple as possible, and we put in the background a lot of the confusion. That said, we're always here to help you, and so if you don't get enough out of our whiteboard session today, feel free to give us a call, and we'll come and talk to you about any questions you have about payments. So at the end of the session, when we talk about payments today, I want you to figure out which one of the words up here is not relevant to payments. And if you can figure that one out now, extra bonus point for you. So let's start at the beginning over here with a payment. What is a simple payment? And this is probably what any one of you understand. This is when a card holder provides their card information and it's processed through the networks and immediately gets a confirmation or a failure message. That happens in real time. It happens over about a quarter to a half of a second. That's probably the most simple one. In a lot of instances, though, you want to do something a bit more complex with your payment. And this is because your payment is either interacting with your back end to maybe release stock, or because you're not sure exactly how much to charge up front. And in these situations, you use something called a pre-auth and collect. It's called pre-auth because you're pre-authorizing with the cardholder's card that the funds are available, and then you collect that amount at a later point in time. So here with that pre-auth and collection, the situation you're probably most familiar with is when you check into a hotel and they tell you, we have reserved X amount of money against the card that you've provided. And there'll often be a warning sign. Same thing with a car rental. And in both instances, they're doing that and doing it to a higher amount than what they expect you to charge because you may end up engaging in incidentals. Or in a car rental situation, you might not return with the car fully fueled. And that way they don't have to go back to engage in another transaction, but have gotten the right to process an additional amount. So there's a few things about a pre-auth and collect that you want to know. The first is once you've pre-authorized, it's as safe as a payment. What a pre-authorization does is it talks to the card networks and says, hello bank of the card holder, I need to hold 100 pounds. And I might take that sometime soon, or I might take a lesser amount. So you know that you've got that money. You're not worried that they run out of funds or that the card's not valid. The second thing to remember with a pre-authorization is you can never take more than the amount you pre-authorize. And so let's use a taxi ride as an example. Maybe you book a ride ahead of time and it's from your home to the airport. And the quote on that ride was 35 pounds. And so if you were that business and you pre-authorized 35 pounds, the problem could come up later when the person decides, can we just stop at an ATM for a minute? Or I'm really hungry, let's get some chicken. I love chicken. And in that instance, they need to add another pound or 5 pounds onto the transaction. And with that 35-pound pre-auth, they can't do it. So they would have to do either a whole new transaction or book the first 35 pounds on one transaction and then engage in another transaction for the remaining amount. Maybe they'd even say, just give me a few pounds in cash. But the better method is always to pre-auth above what you expect to take. That said, one thing to remember when taking money on a pre-auth goes back to the first piece, where you're actually reserving that money against their card. And so if you think you need 50 pounds, don't take 500 pounds because you're actually removing that from their credit availability if it's a credit card, or you're putting a hold on that amount on their bank account if it's a debit card. And customers will very quickly get angry if you do this egregiously. If it's within the realm of the nature of the transaction or a reasonable margin above it, it'll generally work fine. The third thing to remember in a pre-auth and collection is the amount of time that the pre-auth is valid. In a standard pre-auth collection, the pre-authorization will be valid for 3 days before it automatically releases. And so you have 3 days from the time you set a pre-auth until you have to collect against that. I'm simplifying here because there are ways to extend the length of the pre-authorization, but if you were to use Judo's API or most open other payment sources, the standard off-the-shelf pre-auth and collection is a 3-day period. And again, this matters because you don't want to pre-auth something in October and then go and try and collect it 3 months later. In no instance would you be able to do that. You're holding way too long of a liability against the customer. So again, this is really good at pre-auth and collect when you're doing something when there's a gap between the time of an order and the known amount of the final amount due. It also works in a lot of environments where you don't want to actually collect the payment until you know that you're going to deliver the service. So a lot of the e-commerce companies that we work with, they will do a pre-auth at the time of the transaction and not do a collection until it leaves their shipping department. Because there's a chance along the way that their stock isn't able to serve that, and they don't want to go through the process of having to refund everything. They'd rather go back to the merchant or the customer and say, we were unable to deliver that good, would you accept an alternative? And this pre-auth and collect method allows them to do it that way. So now we've talked about payment, pre-auth, and collection. Let's now talk about PCI. PCI is the Payments Council industry, and it's usually DSS is followed by that, and that is Data Security Standards. And what it is essentially is a series of rules that ensure that a cardholder's data is always safe. And any merchant who's taking card data, no matter what person they're working with, always has to ensure they're being PCI compliant. The risk or the burden of proof with PCI all lands with who is holding and storing sensitive card details. And so with a vast majority of the people that we work with and lots of other folks, we take this PCI burden almost completely off your backs by making sure that we hold on to that card data and provide you with tokens so you can safely interact with us. Even with that, you need to state at some point in time, once a year usually, that you are compliant with PCI because you don't store card data. And that's acceptable, takes a minute or two. If you do store card data, then you need to be very careful that you're complying with every one of their rules. If you're found to be in violation of PCI, the fines very quickly run into the millions of pounds. Again, if you have any questions about PCI, you should drop us a line. But if you're working with one of our standard integrations, or frankly with most providers, they will indicate to you that they are taking care of PCI for you. So, the next one I want to talk about is probably pretty straightforward, but this is where we get, as an industry, caught up in our jargon. And when we think about there's buyers and sellers, which is the easiest, we translate that into cardholders and merchants. And so somebody buying a good is a cardholder. Somebody selling a good is a merchant. But the problem with that term is a merchant is meant to indicate anybody who is selling any good or service. So it doesn't need to be a fully fledged business. You as an individual are a merchant if you're accepting card payments. So anytime we're talking about a merchant, it's synonymous with the seller. So next, let's talk about a refund. A refund is pretty straightforward. You've all done it before. For some reason, you return a good or service, or the service was never delivered, and you as a merchant want to refund the payment. So with a refund, which again is very straightforward, the one thing to remember is you can only refund up to the amount of the initial payment. In the instance where you've done a pre-auth and then a collection, and then you need to do a refund, you're limited by the amount of the collection on how much you can refund. There's one exception to this, which is in the gaming industry, where they can do what's called an original funding transaction, which allows them to add additional funds onto a refund above and beyond the amount that was in the original payment. This is essentially how they'll pay out winning bets. In all other industries, this is banned, and you're unable to do a transaction that's in excess of the amount of the original payment. Then we have a chargeback. This is something that's an unfortunate nature of doing business with credit cards, but also one of the reasons why the Visa, MasterCard, and American Express, and the few other smaller card networks are really, really powerful and are unlikely to go away near term. A chargeback is the term used for when an individual or a cardholder begins a process with their bank of saying, I did not purchase that good or service. The most common reasons for it are, I don't recognize this charge, I didn't receive the good or service that I was promised, or the good or service didn't deliver to the level that was promised to me. There's a whole host of other codes that come through that drive the specific nature of the chargeback. But as soon as that customer contacts their bank, which is called an issuing bank, they will begin that process. That will flow through the networks and back to a provider like Judo and indicate to the merchant, you have a chargeback on your account. This transaction from this date is being disputed. What you then have to do is provide information that will flow back to prove that you've delivered that good or service to the cardholder who's questioning the transaction. Now here, the most important thing to know about chargebacks as a merchant is to make sure that you're keeping good records. Because a lot of the times, the reason that customer is initiating a chargeback is because they're not really sure what happened, or they forget about a transaction. So as long as you've kept the records of the receipt of their payment, and hopefully something around shipping details if you're selling them anything, or sending them anything. Any records and information that you can keep that support the fact that you provided the good or service you promised will help you in the event of a chargeback situation. Chargebacks are something that everybody really needs to think about. And as you think about the process in your own service flow, etc., you need to know how to interact with those customers. And it starts with the most simple piece at the beginning, is how do you show up on that cardholder statement? And so you'll see with Judo, we give you the ability to tell us how you want to show up on the cardholder statement. This makes sure that when you remember doing business with Joe's coffee shop, it doesn't show up as Joe's 12375. The more information you provide here, the more specific it is, and even providing a phone number will help you prevent chargebacks, which is one of the biggest drivers of costs and losses in accepting cards. Chargebacks are pretty much all of our enemies. So we talked a little bit about before the issuing bank. And so the issuer or the issuing bank is the banking institution that is on the cardholder side of the overall payments flow. And if you've watched some of our earlier videos, we talked through an issuing bank to a cardholder, how they interact with the card schemes, and then go through to the merchant account. But essentially, what happens is if you've got your cardholder here, they have a relationship with the issuer, which is the bank that provides the card to the cardholder, as well as the bank that's responsible for sending funds eventually back down to the merchant. So that issuer goes and sends data back and forth to Visa and MasterCard. They send that data to the acquirer, which I'll cover off in a second, and the acquirer sends that funds to the merchant. So you have this two-way communication path that goes through these channels. But the issuing bank and the acquiring bank are rarely the same. They can be, and in some instances they are. Barclays, for example, is both an issuing bank and an acquiring bank. An acquiring bank is the bank that's behind a merchant. So for all intent and purpose, if you work with Judo, we're your acquiring bank. We provide the service that interacts with the card networks, and we interact with you to help make this a seamless process. You shouldn't have to worry about any of this, but you need to know that your acquiring bank is going to be on your side when there's anything that could possibly go wrong, and particularly that they're like Judo and have 100% uptime. Because if this acquirer loses connection with this network, you can't take payments. So finally, you'll hear the word ISO. ISO is an independent sales organization. And all that means is that it's somebody working on behalf of an acquiring bank. I mean, you'll see a lot of independent sales organizations across the UK. And in some ways, Judo acts as an independent sales organization for some of our larger customers. And that's beyond the scope of this discussion today, but we can come back to it later. So hopefully, by now, you've noticed that the term that we really haven't talked about at all is arbitrage. So extra bonus points if you email help@judopay.com and give us a good definition for arbitrage. Thanks for spending the time to listen, and feel free to call us if you have any questions. Cheers.